What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, Tesla, NVDA, and Meta. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly which critical levels to watch for the week ahead. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY last week posted the strongest volume it has posted since June 16th. So the last time it posted volume this strong, especially on a red day, which was like Friday, we saw SPY pull back for the next week before reversing at the 20-day moving average. Now this time around, we can see that SPY is already below the 20-day moving average. In fact, it's trading below the 10, 20, and 50-day moving averages, unlike its reversal here. So considering the strong selling volume and considering we are below all these moving averages, we can automatically assume that bears are in control this week going into the Federal Reserve's meeting. So this week we have the FOMC policy meeting on Tuesday and Wednesday. That's where the Feds are expected to decide on interest rates. Right now, there is a 98% chance that they will not raise interest rates for this coming meeting, even though inflation has posted 2 back-to-back months of going up. So obviously the Federal Reserve's main target right now is to bring inflation back down towards 2%. And despite the fact that inflation has gone up for the last 2 months, it's looking like they will not raise rates. However, that does mean that there's likely a chance that they will raise rates in the November meeting. So here in this case, if they don't raise rates and they do as markets expect, it's likely that markets will flatten out and avoid a deeper sell-off. But if they raise rates unexpectedly, it is likely going to result in a sell-off. But either way, it's impossible to tell what's going to happen, which is why we always focus on levels. So now that SPY is below its closest moving averages, the next supports we have to pay attention to are going to be price point supports. We have drawn those out for you conveniently here, and we have the first price point support set at 442.70. This was the reversal that SPY saw on September 6th and September 7th, and you can see that it rallied all the way back towards 451.07 before getting rejected. So that means anything below 442.70 is going to be extremely bearish on the short-term charts, and anything below 451.07 is going to be more comfortably bullish. Now, bulls will start taking a little bit more charge above 448.50, but if you need a breakout point, this is going to be your breakout point, because this is the point in which the bulls gave up the most recent trend and it saw the strongest rejection back down. So that's going to be your main breakout point and focus to regain full control. Now to the downside, anything below 442.70 is going to be strongly controlled by the bears. And of course, the very next support is going to be where this reversal happened. You can see that SPY spent quite a while at this point before pushing up, which means that this is a very strong critical support. And a break below that can take us towards the 437 to 438. Now, obviously, 440 is a psychological support that you don't want to ignore. So it's best that SPY can reverse off one of these supports before breaking below 440, because then it's going to be much harder to get back above that level. Now, another thing worth noting is going to be the VIX, which is the volatility index. And we can see that VIX here in this case posted a strongly bullish day. And it is also what's known as a bullish engulfing. Now, bullish engulfings, especially when they come at the bottom of a trend, they can, but they don't necessarily guarantee, but they can result in a reversal. Here in this case, we saw a bullish engulfing, and you can see that VIX continued to rise for the days to follow. This was between 8.1, 8.2, and 8.3 and 8.4. So let's see what happened on SPY for those days. When we look back to the beginning of August, we can see that those days were indeed bearish days. So the market is going down and it continued to go down for the days to follow as VIX was going up and continued holding up. So anytime VIX is going up or volatility is going up, the market is usually moving in a downside action, but volatility is not surprising to go up before a major meeting like the Federal Reserve's meeting. So now let's switch over to our watch list, starting with Apple, where we can see that Apple has been one of the stocks that has really struggled lately. Now, despite their most recent keynote and the fact that they released the new iPhone 15, it's not looking like buyers are too happy about Apple right now, because the iPhone 15 didn't bring any crazy technology that would really pick up demand for them, and they have already been struggling with demand quarter over quarter. As you can see, their sales have been going down. So we are leaning more bearish than bullish on Apple, mostly because of those reasons we just stated, but also because Apple is trading below all of its healthy moving averages except the 200-day moving average. So here in this case, we have to talk about Apple's levels or price point levels. And first we see that there's a support at 172. If Apple moves below that support, it can get ugly pretty fast because Apple has been holding around the same range for quite a while. So a big move is coming, and we don't know whether it's to the downside or to the upside. So if Apple does break below 172, then that move is likely to follow through to the downside, and we can see a price target of around 166 next on Apple. If you are bullish on the stock, of course, long term, it's not looking like you have anything to worry about. Apple is bound to rebound. But for the short term, you're not going to be comfortable again if you are a buyer unless Apple can recover back above 184.30. Now notice that these are some ambitious price targets, and that's because the Feds are talking this week. Anytime the Feds speak, there's usually a large upside or downside move. So our price targets are pretty ambitious, but we're going to be updating these price targets again next Sunday. So make sure you follow up with our videos so you can know what price targets and what levels to watch on your charts for next week. Now the next stock on our watch list is going to be AMD. AMD posted a strongly bearish day on Friday, which took it down, but not enough to break its critical support. So let's see what happens with AMD this week. If it breaks below 99.60, which is its next critical support, we derived that from this reversal right here. So if AMD breaks below this reversal, then AMD can fall towards a price target of around 93 next. To the upside, AMD first needs to move back above 106.80 to regain its overnight uptrend, but AMD is not truly going to have a breakout unless the stock moves above 113.95. Above that level, AMD can move towards a price target of around 119 to 121. Again, that's an ambitious price target. It may not be able to achieve it this week. So if you are an option trader, make sure you're giving yourself plenty of time on any call that you take or any put that you take, especially if you are swinging. And that's because when the Federal Reserve speak, they move markets very largely, and it can take a few weeks before the price targets come through. Now the next stock on our watch is going to be Tesla. Tesla was surprisingly one of the strongest stocks last week. You can see that Tesla regained all of its healthy moving averages and is now trading very strongly near the 280.70 resistance. So coming into this week, we need Tesla to move above this level to continue its move. But notice that we've already placed Tesla in a green zone, so it's already in bullish territory. Tesla did a fantastic job this week of breaking above that 260 resistance, which was here in this case. You can see that the stock was consolidating just below it and finally gained enough strength to move above it, which means that 260 is the most critical support that Tesla needs to hold going forward. If the stock moves below that level, then it will easily fill this gap back down towards 246 to 248. Now to the upside, if Tesla can continue this move, then it can move towards 284.80. Above that level, the price target is here at 292 to 293. The next stock on our watches is going to be NVDA. Now, NVDA had a very poor performance last week. You can see the stock is back below its 50-day moving average. The last two times it broke below, it managed to recover above. But given the overall market structure and given the fact that they saw strong selling volume, it could mean that NVIDIA is ready to move towards a lower price target. And here's some levels to follow. First things first, NVIDIA is already in that bearish territory, and it will remain as so as long as it's trading below 444.85. If NVIDIA breaks below 433.70, which is its next available support, then it will be a very, very quick move towards 416 to 417. And the reason why we say that's going to be a quick move is because NVIDIA did not really make many supports as it was climbing from 416 to 433. You can see it was a vertical climb, which means that if it breaks the support, it will be a vertical fall. To the upside, NVIDIA will need to regain a level at least above 463.15 in order for it to start moving towards the bullish price targets of 471 and 486. We will be updating these price targets, like we said, next week, so make sure you check back in. The final stock on our watches is going to be Meta. Now, Meta attempted a nice move to start the week, but unfortunately market momentum and market selling volume took it back down. Meta reached a level around 413.15 before getting rejected, which was just above our breakout that we had last week. I believe our breakout was around 412 and 312, and Meta only reached 313 before getting rejected. So that means 313 is going to be the next resistance in focus. Now, the fact that Meta already got rejected on one breakout attempt, if it does come back around to breakout next, it will likely succeed because that means buyers are definitely interested. So if Meta can move above that 313 mark, then we see a next price target of around 318 to 319. But given the fact that it closed the Friday below its 50 and 10-day moving average, there are downside supports to pay attention to as well. First downside support is going to be 219.15. We can even technically put another support right around the low of day, which was 298.75. So if we put a support here at 298.75, we can get away with that just to start off our week. And then, of course, the supports that follow are going to be 292.15 below that level, 285 to 286, which would be the downside price target. So if you're taking puts or a short position, you can do so below 292.15 to this price target. And if Meta moves back above this level, then you can cut your puts or cut your short position. So I hope you guys found this video helpful. Thank you so much for checking in. Please don't forget to subscribe and like.